Alibaba is one of the largest global conglomerates in the world. It's a leading e-commerce player, but over the past year, the share price for Alibaba is down by around 50%. After losing nearly half of its market cap, there's questions about whether it's now time to buy Alibaba. It's been attracting a lot of investor interest, including some of the leading global value investors, names such as Mohnish, Pabrai, as well as Charlie Munger. There's been a lot of discussions about how far it's fallen and whether it's fallen below its intrinsic value. And in today's video, we're going to unpack it all. It's time for us to deep dive into the BABA story. We're talking about the company itself. We'll talk about why the share price has fallen off over this past period. It's going to be a look and a snapshot into the current state of play. And of course, we'll talk about where the future might head for Alibaba moving forward. If you do enjoy the video, don't forget to hit the like button. Feel free to share it out. We make daily videos, so if you're new here, welcome. Make sure you've subscribed and turn your bell notifications on as well. And so I guess the first question before we dive into the numbers, the story, and everything that's been playing out recently, it makes sense for us to answer the first question on the list. Who is Alibaba? I'm sure you're probably familiar with the name. You would have heard of it before, potentially you've purchased some items off it. However, Alibaba is much broader than many people really understand. It's a true global conglomerate. Of course, the core of its offering centers around its e-commerce, both at home in China as well as its global offering. But it really is a multifaceted offering, providing access to consumers with C2C offerings, B2C offerings, but also a significant amount of wholesaling and B2B offerings as well. As you can see here in China, they have Taobao, which is their flagship platform. That's a consumer-to-consumer type marketplace, while TMall is that business-to-consumer marketplace. While cross-border and global, they have AliExpress, which gives access to retail consumers, while Alibaba, of course, is that flagship global wholesale B2B play. Just having a look at that, it gives you an insight into just the breadth of their total offering underneath it. But as well as that, they've expanded into other sectors such as digital media and entertainment. They've got a range of innovation initiatives as well that they continue to invest into. But underneath all of that, they have significant financial services offerings under the Ant Group banner. And then, of course, their cloud computing unit. We've seen what Amazon has done with their AWS, Amazon Web Services offering. We all know about the future as the world continues to digitize moving forward. And Alibaba have got a business unit that can really help to feed into that moving forward. We'd love to know your thoughts on it all, so drop in a comment below what you think about Alibaba and where do you think it currently sits with its share price. And also a reminder that before we dive in, I'm not a financial advisor and nothing we discuss is financial advice. These videos are just here as a general discussion to be that starting spot for you to do your own research from. Of course, there's a lot for us to unpack in terms of company news and the data behind it all. But also thinking about the current state of play is important in terms of the macroeconomic environment in China as well as around the world. We know that China, after Deng Xiaoping opened up the economy in 1978, achieved the China miracle. This has been a period of unparalleled growth where China has seen its GDP grow by 6, 7, 8% year on year, year in and out. It's been an absolutely phenomenal past period of growth. And of course, that's really been underpinning an emerging middle class. And on the back of an emerging middle class, particularly with such a significantly large population, that's driving up consumption across the nation. Due to the general regulation in China, they go through cycles of regulation. This, of course, has the ability to affect different types of sectors as well as companies within those sectors. And we know that the Chinese tech sector has been selling off recently for a range of different reasons, which we'll touch on later on the video. And so you might be wondering, why has Alibaba's share price crashed? It's definitely a multifaceted discussion. There's not been one individual reason why it's crashed, but there's been a range of different factors that have contributed into it. Firstly, we know there's been some broad sector crackdowns from the Chinese government. This has affected sectors such as the for-profit tutoring sector, as well as video games recently. They have stated that they're going to be continuing to crack down on a range of different sectors and looking for regulation moving forward. They have outlined an anti-monopolistic focus, and this is likely to continue for a period of years. But there has been a range of other different factors contributing to the BABA share price decline as well. Firstly, there's been concerns surrounding delisting. We know the audit discussion that happened earlier for many of the Chinese companies that were listed over in the US that were affected earlier this year. There is still a few more years for that to play out, but this is one that continues to have a bit of uncertainty hanging over those Chinese companies that are listed in whatever form over in the United States. Well, of course, we know that there is the debt crisis concerns as well. Evergrande is the company that many people are familiar with, but there's been other companies as well that have discussed debt concerns. And so the question is, how will this situation play out too? It's still an evolving one, so we'll wait to see more data, but all of these factors have contributed into it. Of course, we know that Ant Group, which is a part of the broader Alibaba Group, was planning on an IPO listing, which would have been one of the largest IPOs in history, over $30 billion. However, the IPO was pulled at the back end of 2020. But it is worth noting as well that the Ant Group's IPO may now be back on the table after the fintech is now poised to create a JV with a group of Chinese government-backed firms. This shows that some of the issues that are playing out in China can be worked through, but of course they may be worked through in different types of ways that you may be used to seeing on other types of markets around the world. It is worth noting as well with the understanding that the catalyst for the share price decline predominantly was more macro driven rather than it was company induced. As we will see when we look at the numbers for Alibaba, they've continued to grow at rapid growth rates over this past period. So it hasn't been an indication of any faltering in terms of the company, but it's been a broader discussion about the actual macroeconomic space surrounding it. And so having a look at the NYSE Baba share price, you can see here that the share price is down by around 50% over the past year. It reached high of over $300 US, but now it's trading in and around that $150, $160 mark. And so if you look at some of those high level numbers here, just to get a bit of a snapshot into where Alibaba is currently sitting. Its market cap at its highs was trading around that $1 trillion mark. It's come down and is now trading at below $500 billion. If you look at it on a trailing PE basis, it's trading below 20. If you think about the S&P 500 at its current state, on a forward basis, it's trading with a forward PE above 20. And that's crazy to think about, but it will be brought more into light as well when we speak about Alibaba's numbers and the past periods of growth. It's been growing at far exceeding double-digit growth rates over this past period, 30 to 40% year in, year out. And so, of course, to be trading at such a steep discount is why there's a lot of longer-term value investors that are starting to be interested in the BABA story. And so having a look here at some of the high-level numbers for the breakdown between the service offerings underneath the Alibaba banner. You can see here that their e-commerce unit makes up over 3/4 of their total revenue. You can see China Commerce Retail is 66% by itself, which is significant, and total core commerce is around 87%. It is fascinating to see that when you look at the growth rates over this past period, for the total growth of the revenue streams, it's been growing around 30 to 40% year in and year out. For companies traditionally that would be growing at 30 to 40% year in and year out, you would expect them to be trading at far higher multiples than Alibaba is trading at. But of course, there is inherent risk and there's been inherent uncertainty, particularly surrounding the geopolitical space. And that's why it's trading at a discount. But many value investors are now starting to think that the discount has been too steep, the sell-off has been too sharp, and it's probably run too far to the south side. And that's why there's been a fair bit of interest. It is also worth paying attention here, the cloud computing unit. The cloud computing unit still makes up less than 1/10 of the total revenue for Alibaba Group. However, we all know about the huge opportunity that cloud computing will continue to be as a digitization of the world and technology really picks up pace. And so if Alibaba's cloud computing group can continue to grow, it's growing from a relatively small base at this stage, then it starts to become more compelling. But even just with its current growth rate for the e-commerce business itself, if it can get to double-digit growth rates, which looks conservative, if not significantly higher in that 20, 30, 40% band, well then the value that it's currently trading at looks fairly interesting. But of course, when you layer on top that cloud computing unit, which is relatively uncertain because it's growing from that earlier stage, but if it can continue to grow and follow AWS's model, well then the Alibaba offering is certainly a fascinating and compelling one for those investors in that value space. And so that leads us to the recent headlines surrounding Charlie Munger buying. So Charlie Munger has been holding a position and continuing to add to that over the past period, but we got his most recent Q3 SEC 13F filings. We know that for institutional investment managers who hold over $100 million assets under management, they've got to file 13Fs. Of course, these are retrospective looking. However, they give an insight into where some of these leading investors are purchasing. As we can see here, the amount of shares that Charlie Munger bought into Alibaba over the past period was significant. He bought and boosted his position by 82% in the quarter and traded for around an average price of $182. You can see there the blue line on the graph. He brought down his average price quite significantly, but really underpinning all of that, he added to his holdings and almost nearly doubled them. There, of course, is a lot of interest when leading investors such as Mohnish, Pabrai, Charlie Munger, and Phil Towns, as well as others, adding to their positions in Alibaba Group. And we saw that when Charlie Munger's 13F filings actually came out, the share price did rise on the back of that, as well as for a range of other factors. So it's going to be interesting to see where Alibaba Group heads from here moving forward. And so then I guess pulling that all together, what does it all mean? It is clear to see that there is significant fear and doubt surrounding the Alibaba share price, as well as the broader macroeconomic environment surrounding China at the moment. We do know, however, that scale in itself is an inherent moat, and Alibaba Group, as much as any other company out there, really does benefit from network effects. Of course, if you think about its e-commerce platforms and marketplaces in isolation, as you have more buyers who are interested in purchasing products, particularly as the emerging middle class picks up and consumption continues to grow over time. Well, as my buyers come on, then more sellers will be interested in selling their products on there. When there's more sellers, which increase the ranges available, then of course more buyers will come on, and it will grow within its own virtuous cycle over time. But really more broader than that, Alibaba Group has what's been coined as the Iron Triangle. So the Iron Triangle, of course, has three key pillars. It's got its e-commerce businesses, which we've spoken about. It's got its financial arm, which of course encompasses Ant Group and everything within that. And then it's got the logistics side as well, which Alibaba Group has built up. Each of these three units feed into themselves, because an e-commerce unit by itself would not be successful, and it wouldn't really drive that consumer experience unless it had a smooth financial unit underpinning it, as well as logistics ensuring that customers got what they ordered on time and really faster than they anticipated. And so Alibaba built themselves up from the early stages and really built out the business units and the capabilities that they needed to drive this growth. And now they've achieved a scale, which in itself really is a moat surrounding the business unit. It's very difficult for any e-commerce companies to really try to replicate what they've done in China, and they are years ahead with significant competitive advantages. It is also worth noting that yes, the Chinese government has been focused on regulation, and Alibaba has definitely not been immune from that, but governments by themselves don't want their companies to fail. Alibaba is a crown jewel, and it's a real treasured company within China's ecosystem. Not only does it help to facilitate economic growth, but it also is one of their leading companies. And so the government, of course, don't want it to fail. I think it is clear to investors that there are inherent risks and uncertainty surrounding Alibaba and the broader technology sector in China. There, of course, is the threat of future regulation. There's uncertainty surrounding everything that's been playing out at the moment. But the question that investors will continue to keep asking themselves is, what are they willing to pay? And has a sell-off gone too deep and too far, and probably sold too much to the south side? Everyone's going to have a different interpretation and opinion on that. Of course, it will be underpinned by the assumptions that you use, particularly for the growth moving forward. We do know that Alibaba is focused not only on growing their top line, which they have done successfully over time, but they're also focused on continuing to grow their free cash flow as well. They've upped their share buyback program. They obviously see value within their share price at the current state that it's in. And so it's going to be fascinating to see as they can continue to grow their free cash flows over time. And of course, particularly the cloud computing unit, but their other business units as well, have the opportunity to continue to expand their operating leverage. We know that the cloud computing unit in itself is going to have significantly high margins, particularly once it starts to reach economies of scale. We'd love to know your thoughts on it all. It is a fascinating time, and it's an interesting story that will continue to evolve moving forward. I think before we end, it makes sense to end on one final quote that many investors have been reflecting on during this past period. That is the famous Warren Buffett's quote, Charlie Munger's partner, who stated, "Be fearful when others are greedy, and be greedy when others are fearful." Everyone's going to have a different interpretation of it. We'd love to know yours, so drop in a comment below what you're thinking about it all and how you're perceiving it. If you did enjoy the video, don't forget to hit the like button. Feel free to share it out. We make daily videos, so make sure you've subscribed and turn your bell notifications on. As mentioned, these videos are just here as a general discussion to be that starting spot for your own research. And hopefully after this one, you can check out one of our other videos on the channel. Thank you so much for joining us. For now, stay well and happy investing.